Long-term, I am still. Nothing's changed my long-term view, Scott. But I do think that we have the potential after this rate hike into the middle of this month to have a surprising rout. I think that the inflation number we get for this month will be the first time that we're actually lapping something with a four handle in front of it. As remember, March of 2021 was 2.6%, but April 2021 was 4.2%. So we have to start talking about that base effect again. And this time it's working the other way. And so the headline number should come in less than that 8%. It doesn't mean that we're in a more benign inflationary environment, but that won't stop folks who have been talking about peak inflation and talking about the transitory nature last year from taking the victory lap, and it probably won't stop the Fed from taking the victory lap. And I think that could put some tailwind into the market mid-month.
You do hear more people talking about peak inflation and what that could mean, including Brad Gerstner of Altimeter, who was on with me on the halftime report today. I want you to listen to what Brad said about that issue, and we can discuss on the other side.
I think inflation is already rolled over. I think there's already a tremendous amount of demand destruction occurring in the world. The Fed and what the Fed does in terms of rates over the course of the next 6 months will determine the path of multiples. I think it's at least even odds that direction will be up from here because so much has come out of the market from a growth multiple perspective.
All right, so that's Brad Gerstner today. Greg, he also said, by the way, risk is, quote, more asymmetric to the upside, that you have to find opportunities to buy. Howard Marks on with Sarah within the last hour. I do think that the worst of the excesses have been corrected. The groups that did the best in 20 and 21 have been hit the hardest. What do you make?
Yeah, I think that that's partially true. I do think that, like I said, I'm as you noted, I'm towards the low end on what we're going to see in terms of growth this year. You know, I'm at mid-single digits, and I do think that expectations for growth have to come in. But I'm not going to make an argument on multiples. I think we'd largely agree there that we're not going to get a lot of multiple expansion here, but we can get performance in the back half with companies that are going to grow their earnings double digits.
Yeah. What about the idea of the tremendous amount of uncertainty that is in the market? There are a lot of big names. Marks and Gerstner are just two among them out in Los Angeles who are talking about this very issue. Ken Griffin calls it the most uncertainty he's seen in the market since the global financial crisis. You heard Paul Tudor Jones, I hope, this morning on our network, who was talking about the scenario being very, very difficult for Jay Powell. How does that factor into your overall view? And is that principally why you can't be more positive on a longer term perspective?
You know, I'm going to put some fingers here, I guess, Scott. You know, some of this is Jerome Powell's doing. And so, you know, there are many of us who encouraged him to come out of Jackson Hole last year and announce a plan to raise rates and tighten the balance sheet and taper. But they decided to pass on that. And I think it would have been an opportune time in the midst of what was a very strong third quarter earnings season to do that. And because he finds himself behind the curve, he has very little options. At this point, I think that it's pretty much dictated in stone what he has to do throughout the course of this year. Whether we see the economy over-responding to that or not, I'm probably in that camp of saying we've added to the uncertainty that we had to face this year by not responding to it sooner. And so I would agree with all those luminaries.